Hey guys, Mike here. So we had a nice move down on Friday. We kind of touched on a Saturday video, a little bounce back at the end of the day. We'll talk about what caused that, actually what caused the sell-off, and what caused the pop-up as well. Because there was something that happened. We'll go over a few stocks that are setting up, doing some retests that could bounce so we can get something going on. Don't forget, we got a shortened week coming up. We got New Year's. And so what you saw last week, you could see going on this week, maybe a little more tax loss harvesting going on in the first couple of days, and then we'll be into 2025. And boy, did 2024 seem to fly. But we'll go into a few things as well, because we had touched on Warren Buffett a little bit, Apple, and things like that. But I'll show you something about the Buffett indicator that's pretty interesting to me, at least, and really what's causing it, where it's at right now if you don't know. And why it doesn't act like it used to act. Those two very important things you need to understand when it comes to that. And so we're getting into all that, guys. Please hit the like and subscribe button if you get anything out of this. I always appreciate it. But when you look here, this is the Buffett indicator. If you've never seen it, it's been around for decades, probably before I was even born. But when you get to two standard deviations, at some point in time, the market usually finally comes to reality, right? And you've seen it back here in the 70s. There's the .com. Here's 2021. You can see where we're at now. We zoom in. We're right there again in two standard deviations. There is a reason for this. There's two major reasons why you're seeing this, and we've been up there for a while now. We were up there a long time for 2021 as well, or 2020 and 2021. One is market concentration. We've never seen it before. It's at 35.7 for the top 8 stocks right there. And you can see it really started taking off after 2020, right? Going from 27 to 30 to 35. Before this, during the dot-com bubble, 22 was the top 8 stocks right there, as you can clearly see. 2008, it was 19. And so we just had never seen anything like it. And the other thing is got to do with the government. The government's just never been more involved. After 08, they took it over, the stock market, the bond market. They've never been so fast to jump in anytime the market is starting to move down to help it out. They've never been in more of this deal where they choose winners and losers in the market. It's just unbelievable. Of course, we've never had our Congress be more bought off by publicly traded companies either. So that has, a whole lot to do with it as well. And so that's why when you see this used to, when the Buffett indicator got up to two standard deviations, it didn't take too long before reality checked in. And now, like, you go back in the 2021 part of it, it was up there for quite a while. And it's going to be up there for quite a while in this one, or it's been up there for quite a while already. And so, but eventually, yes, gravity does take effect. Things happen. And so, again, we got another administration coming in with a whole different set of policies. And so, we got to see how that's going to affect things. And so that's kind of what's, I just wanted you to get a visual on that. And one thing you saw last week was what? Major outflows, right? It's the biggest we've seen in 2 years, about 35.3 billion. You can see that big little bar down at the bottom. I mean, look at the ones up top, though. Look at how much flowed in, going right there in the beginning of December, I believe that is right there. That's crazy, right? I mean, look at that. And so, people were moving out, and that's why you saw that big capitulation move down right there. We kind of got half of it back a little bit and then started moving down on Friday. But the breath does suck. I mean, let's be honest with you. This is stocks above their 50-day moving average, setting below 25%. But here's the thing for the shorter term. Stocks above their 20-day moving average, setting at 14% on the S&P. Keep in mind there's 500 stocks, or plus actually, 502 stocks. If you can count, Google and Berkshire Hathaway have two different classes of shares. And then the 5-day moving average, we bumped down to around, 20%, I think it was. And then we bounced at the end of the day, because this is a daily deal here. But normally you get that line and you see a shorter term bounce. Doesn't mean it has to be longer term, doesn't mean anything else. But when you get down there, this is normal what happens. So don't be surprised. Again, this is a shorter week. We saw the volatility last week. And I'll show you exactly why we bounced on Friday. And we were coming down almost 2% on some of those indexes. You'll see what the S&P did. It hit what? It hit that 50 moving average. And so that's what rescued it on Friday, which, not a bad thing. And, clearly if we lose the 50, I mean, maybe we finally come down and fill this, election gap right here. We'll have to see. We are below that trend line. And when you look what happened here, you can see that we end up rejecting on Wednesday and Thursday that ascending trend line, which also mitigated that huge daily fair value gap. But that trend line, has been holding in place pretty good for us going back to August, and it just broke it, came up, retested, got rejected not once but twice. And so, that's what saved us on Friday. That's what brought us down on Friday. And when you look at IWM, we talked about this. Hey, let's get above the FOMC anchor VWAP. It pushes up, and I said, look at this. You know, dramatics, right? Got to keep us in resistance. Got to end us right there at resistance. And then, boom, immediate gap down. 10-year pops again. This thing comes back down, gets rejected twice off this anchored VWAP once again. But when you look at it, though, what do we see here? We're seeing higher lows, and we're seeing higher highs. And so what I'm going to do is we're just going to throw a rectangle right here, because this area, obviously you can see, is been getting bought up for the last week. Every time it comes down there, we end up getting a pop up. Okay. And so we see where the resistance is going to be. It's going to be right up there at 226.12. Need to get through that. Need to get through that anchor VWAP and also hold it. But the fact that it is setting higher lows and higher highs. Now, if it breaks this shaded area, well, obviously that is not good at all. But remember, where's the 10-year now? It's setting in resistance at this point in time, setting in a double resistance, which I'm going to go over with members tomorrow and show them that. But again, there's a gap above to be filled now. Big resistance. If it gets to 226.12, though, I think it's going to fly, right? But when you look, right now, we're just in a channel. That's what this thing's doing. Okay, we're just in this channel right here. So we'll see if we can just keep moving up in that channel, right? Get to the top of that channel, which means we'd have to break that resistance. And so watch out for that one. Again, it'll depend on economic data and stuff like that. Nvidia, clearly this one right here came down, tested that descending trend line, held above us. Now it's above the ascending trend line. The descending trend line mitigated the daily fair value gap, which is a good thing. And so, but it's below the 50, okay? 140.42, we talked about this on Thursday's video. I was like, man, are they really going to pay out all these calls, whatever? They just don't seem to be letting it above it right now. And so if it breaks down, watch 131.80 right in there with that 100 moving average is going to be moving up to is support for right now. But obviously, if we can break 140.42, 144.51 will probably come pretty quickly on Nvidia. And a lot of this is going to depend on which stock. And you can even guess which stock I'm going to say right now is going to be Tesla. And you can see Tesla, what it do? More drama. It held that ascending trend line right there when it came down. It bounced on it now twice, and it has held it. Okay, that's the one from the election gap up, where when it comes down and starts to sell off, it continues to bounce from there. Now, of course, if you're looking at this chart on the 4-hour, you're going, wait a minute, that was like a lower high, excuse me. Yeah, it's a lower high, but it's also still a higher low. It's like it's just wedging right here. So that was the November right there, as you can see. And we bounced every time so far, you know, and it comes down to if Nvidia does finally catch a bid, a real bid, like what's Tesla going to do? All right, are we finally going to break this freaking trend of both these guys can't move up more than one day together and actually, you know, do this? So if it breaks up, does Tesla break that trend line? And if it does, well, of course, we'll be coming down a little bit farther. Now, Microsoft, you can see it's coming back down and it's retesting its breakout trend line right there, as you can see it. And so if this does bounce, look for it to fill that gap right there that's above, and I'll zoom in on this for you so you can actually see it. But that gap right there will end right around 437.88. And obviously, if it breaks down, I'm going to assume it's going to stop right there around 424.48 at that daily fair value gap. Now, watch out for Roblox. We've been talking about this one. We talked about it a few weeks ago as well, about filling that gap. It's filled about half that gap right now. And then the market started to show weakness. But this is just one of those ones. You're sitting here starting to do this bullish flag pattern right here again, setting on the daily these higher lows right here, but then it keeps pouncing up against that trend line. If it does break above it, finally maybe we get to $65, which would fill that gap right there, which has been a long time waiting, because this is one of those ones, man, setting in stage one for over 2 years. Okay, now lemonade is another one we talked about. Remember I said, is this a false breakout? Because I like to see a full candle close above, or at least if we get a half when it come down and retest the trend line and bounce. But we just had a huge 10% move back down, kept us in this rectangle right here. So false breakout, a lot of them are like that. A lot of these high flyers are like that. And so we'll pull this out, this little box right here, and say, okay, are we going to hold this level and get some traction here? And obviously if we do, you can see 0.79 fibs is going to be where to look at, around 47, above that 56, okay? And then, of course, this is one of those ones that moves quickly. But if it breaks down below, we're going to pull this other rectangle that's below us out, because that's pretty much where it's going to head. If it loses that middle zone right there, we're going to be heading down here between like 30, 36 bucks, somewhere in there. Now, as far as economic data, we got Chicago PMI on Monday, pending home sales month over month. Tuesday, I wouldn't really worry about too much. Wednesday, we're closed. Happy New Year's. Thursday, unemployment claims, final manufacturing PMI, construction spending, crude oil inventories, and then Friday, ISM manufacturing prices. And then, of course, one of the Fed speakers will talk and run their mouth. And so it'll be another fun week. Let me know if you got any great plans for New Year's and stuff. So as usual, hit that like and subscribe button on your way out, guys. Think about signing up for the membership. Less than McDonald's combo, and that's everything you get with it. And I will see you guys tomorrow.